Jason Bond from the Boole Microcap Fund. One of the best ideas in our fund currently is Geodrill, ticker GEO in Toronto and GEODF over the counter. Geodrill is a drilling company that extracts mineral samples seeking gold and other ores from major, intermediate, and junior mining companies in Africa and South America. The CEO and founder Dave Harper owns 40% of the shares, and he's looking to sell the business at 5 times enterprise value to EBITDA, which would value the company at $4.48, 170% higher than today's stock price of $166. Dave Harper started the company in 1998 with one rig and one contract. He has built the business into what it is today with 89 rigs and operations in 6 countries: Cote d'Ivoire, Senegal, and Mali in West Africa, Egypt in North Africa, and Peru and Chile in South America. This growth has been entirely organic, so he has not made any acquisitions. Geodrill has built a strong reputation for quality and reliability in the drilling industry, which has translated into long-term contracts and relationships with major customers such as Barrick, Newmont, Centamin, Endeavor, and others. In the first quarter of 2024, the company secured new contracts totaling $150 million, including 2 significant multi-rig, multi-year contracts with Tier 1 mining companies. A single gold mine can require drilling services for decades, including greenfield exploration, pre-feasibility, feasibility, mine construction, and life of mine extension. Furthermore, many of the gold mines in the world today are aging and require significant capital in order to offset declining production. Because the gold price is now over $2,400 per ounce, it is highly profitable for most gold miners to invest capital into their gold mines. In recent years, Geodrill has invested heavily in modern equipment and world-class operations in preparation for the upcycle in gold prices that is now happening. At $2,400 an ounce, most gold mines are solidly profitable, and gold could easily exceed $3,000 or $4,000 an ounce before this upcycle is complete. Here are the multiples for Geodrill. The enterprise value to EBITDA is 1.92, the price-to-earnings ratio is 3.86, price to book is 0.70, price to cash flow is 3.24, and price to sales is 0.62. These multiples are based upon normalized estimates. Geodrill's metrics of cheapness are exceptionally low. Tangible book value is $2.37 per share, while the stock price is only $166. The forward dividend yield is 3.94%. As noted, CEO and founder Dave Harper owns 40% of the shares. Currently, the return on equity is low. It's 3.5%, but that's because the company had a couple of rough quarters. Within the next 2 to 4 quarters, ROE should be solidly higher. Cash is $7.9 million, while debt is $10.8 million. The total liabilities to total assets is 26.2%, which is excellent. In terms of intrinsic value, the low case, if there's a bear market or a recession, then the stock could decline temporarily. This would be a major buying opportunity. The mid case, as noted, Dave Harper owns 40% of the shares and he's looking to sell his business at 5 times enterprise value to EBITDA. This would mean a stock price of $4.48 per share, which is 170% higher than today's $166. High case, EBITDA could reach 50 million if gold prices continue to move higher. At an enterprise value to EBITDA multiple of 6 times, the stock would have an intrinsic value of $6.32 per share, which is over 280% higher than today's stock price of 166. Risks, as noted, there could be a bear market or a recession, during which the stock could decline temporarily. This would be a major buying opportunity. Also, gold prices could fall. And finally, there could be political instability in Africa or in Peru or Chile. This has rarely been an issue for the company in the past, but something is always possible.